Tariffs are spreading heightened market volatility through equities and fixed income. Good morning, everyone. It's becoming increasingly difficult to provide some rationale to the latest evolution of the tariff escalation across the US. The threat overnight of 100% tariffs on China just simply isn't credible from Donald Trump. So where are we? Well, the backdrop as we came into the year and even in the early part of this year was strong. We were seeing cyclical strength in economies such as Germany and China as they emerged from quasi-recessions, and the US in particular was very strong. The private sector has never been so healthy, with low loan balances and high asset valuations. However, tariffs have spread global uncertainty. What we've been seeing at True Potential is our managers had been de-risking ahead of April the 2nd. That is, they had been reducing their equity balances. Now also, the True Potential portfolio team here had also been increasing diversification across portfolios. And in fact, that's what we've seen take hold in the last week. Advanced diversification has worked for our clients. However, such is the extreme move in markets, it's difficult to diversify away from equity risk. But this is very, very different from 2022. Back in 2022, both equities and bonds were overvalued and the global economy was subject to an inflation shock. This time round, global economies appear set to be subject to a growth shock, and bond valuations are much more healthy, such that they are actually diversifying risk in portfolios. That is, as equity prices fall, bond prices have risen over this year. That means bond yields have fallen, so it's becoming cheaper for governments to borrow or refinance should they wish to increase their borrowings. And this is providing that much needed diversification for client portfolios. Also, if we cast our mind back to 2022, central banks had to increase interest rates to try and thwart the threat of inflation. This time round, with inflation around about 2 to 3% in most major economies, central banks began cutting interest rates last year and are likely to cut interest rates again substantially this year. Markets expect interest rates in both the US and the UK to fall towards 3% this year. Reminder, they're above 4% currently, but that's the base case. If there's any weakness in jobs data, expect central banks to pull forward interest rate cuts and deliver bigger cuts up front. Also cast our mind back to 2022, when the inflation shock was being led by global energy prices after the surge in global good prices. We saw oil prices go towards $120 a barrel, and we saw wholesale gas prices here in the UK go up to £500. Well, now oil prices are half of what they were in 2022, and they are falling. And this is going to deliver a form of deflationary impulse across measures of CPI through the spring and into the summer. Wholesale gas prices in the UK have also fallen 35% since January. Now, some of this is a seasonal effect as the peak winter demand subsides and we go towards warmer weather. However, this will feed through into the energy price cap reset, which comes through in July. At the margin, all of these things add up to a form of deflationary impulse. And of course, goods prices are likely to decrease across the rest of the world, even if they increase in the US because of tariffs. If the goods can't find their way into the US, they will likely find their way into places like Europe and the UK at a much lower price. Overnight, we're seeing stories, for instance, of Teslas the price of those being cut in the UK and Europe. So at the margin, there is a deflationary impulse, much different from 2022. We also know that interest rates on bonds are falling and central banks are likely to cut rates. But as and until Donald Trump signals to markets where his line in the sand is, we expect equity volatility to continue, and that's why our managers across True Potential portfolios and your investment team here have de-risked and added to diversification. Please do stay with us for the rest of the week as we'll keep you informed on actions in portfolios and any news we think is worth commenting on with regards to tariffs. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.